All right, welcome back to Yahoo Finance Live. We'll check on the markets with just a bit before trading closes. Let's see the Dow falling now 222 points. And to check out the S&P and the NASDAQ hovering around the level point, down just a bit on the S&P and the NASDAQ just barely in the positive. What is ahead for this economy and equities? Let's talk about all of it with Johan Grahn, Allianz Investment Management Head ETF Market Strategist. Nice to see you, sir. Seems like the market's, relatively speaking, holding their breath. What could be the next catalyst around the corner?
Well, Dave, it's good to see you. Thank you. Catalysts, there could be all kinds of catalysts around the corner for you, just lurking in the background here. The one thing that we've seen is that we have an environment of increased volatility. And even if it's been coming down a little bit this past week, we're still in a pretty high volatility environment by historical standards, so to speak. So it basically tells you that all the known factors are baked in, and that the known factors are bound to swing one way or another, or something new will pop up at any point in time. So it's a good question with a very weak answer for you, because it could be a myriad of things.
Well, Johan, when you take into account what's happening today, where we are at current levels here, I think a lot of people are trying to figure out how exactly to play this market, given all of that uncertainty that you were just talking about. So what's your advice to those who are trying to decide what now is, I guess, what is best to do right now?
Yeah, it really depends on what kind of time you have. And I mean, frankly, most of the assets are sitting in retirement account, as you know. So it's really those investors and Americans that have the least amount of time left in their investing careers, so to speak. And what it leads to is a fight against this wealth destruction that the Fed has set out to navigate for us, if you will. And what it comes down to is that you have to be more conservative. You got to think about how you can keep that wealth as opposed to rallying for the highest potential return. And there are various ways you can do it. And I think one of the benefits of the current environment, even though it's a silver lining, given the volatility that we're in, is that when you look at this market with higher equity volatility and also higher fixed income volatility, higher rates, it gives you an opportunity to invest in structured products where you can actually set the definition of what you're looking for. And it gives you more upside, given the unit of risk that you're mitigating on the downside in an environment like this.
Johan, many just feel that the 10-year is really in control and closing their eyes to the equities right now to the highest we've seen since November, 50-plus basis points this month alone. What does it tell you is around the corner?
Well, the proverbial Fed tactics are always around the corner, as you know, and we're still looking at this environment where you have a Fed consistently telling the market that you are going to have to be more patient, and the market reacting and responding consecutively to all this communication. And it's happened over and over and over again. Every time the Fed comes out to have this conversation, the market will try to call the bluff, and then they have to move aside and say, okay, fine, we'll adjust accordingly. And it keeps happening. And I think that right now we might be very much closer to the point where the market is frankly catching up to what the Fed has been saying all along. And now we're talking about the duration of how long the Fed is going to keep the rates high and how many more hikes they're going to pursue to get there.
And you see no pivot until 24, presumably?
No pivot until 24. The market is still, there's a little bit of a delta between what the market is pricing in and what the Fed is speaking to the market. But in terms of a real pivot, nothing until 2024 for sure.